Welcome back to the episode of my trading vlog, where most of the views come from returning subscribers. If that's you, hit the like button. Today, I want to go over what may or may not happen with SPY. This is an ETF covering the S&P 500 index. It's bearish, or is it bullish? We don't know. We're gonna have a look. I want to just remind everyone that Elliott wave analysis is not super predictive. It's a good way of expressing what price has done, and in understanding what price has done, we can better understand where the markets may or may not go. There's no predicting the future, but we can get it down to probably a 60% chance of getting it right, which is pretty good. 70 is best. Of course, no one can get it right all the time. I'm not going to worry too much about getting the wave degrees totally right. This is pretty conceptual. I just want to make it easy. So we have wave 1, okay, which was a downtrend off of that all-time high. What occurs from there is a 3-wave motion, waves A, B, and C, that forms a corrective wave 2. Those A, B, and C waves are at a smaller wave degree. That is to say, there's always an uptrend and a downtrend at the same time working, and one is larger than the other. When one is smaller, we call that a smaller wave degree. So wave degrees, size of moves. It's not too hard, but it can be complicated. For instance, this first counter trend to that push down one, that push up, that'd be A. The move down would be B, and this next move would be C. And yes, you can see that each successive wave gets a little taller. And when corrective waves do this, it creates a tremendous amount of uncertainty in the market. From there, we saw a massive push lower. And there are 5 waves through here, I believe, that make me think that we could have actually completed wave 2 up here, A, B, and C, making wave 2. And then found ourselves in wave 3, which is a scary strong wave, right? And this wave has 5 wave degrees inside of it, which could be 1, a small wave for 2. This could have been 3, 4, and 5, leading us down here to the bottom of 3. And that would be at a wave degree below the one, of course, that is shown here, which happens to be cycle. And from there, we had a big strong push heading higher. Again, here we go. You ready for this? Waves A, waves B, and C show up yet again to form wave number 4 of this motive trend. A motive trend having 5 waves, looking for one more wave down to complete that. And you get it down here in a classic 5th wave truncation at a smaller degree. 1, 2, 3, 4, 5. Ends right here. I mean, it's not really truncated because there was a new low. You don't set a new low in wave 5. We call it truncated. And by that, I mean the end of wave 3. We definitely passed the end of wave 3, but at the smaller wave degree, we just barely passed it as well. So there's some commonality there in this smaller wave 5 and this overall push. It's pretty common that you see that. I don't know why I call it fractaling, but whatever. Now what's important is that wave 4 there didn't pass below the bottom of wave 1. That's a rule, is that wave 4 cannot pass into the range of wave 1. Big rule there. So there you go, a little space there, wave 4 failing to reach into the low of wave 1. Perfect. And of course, on a daily closing basis, a line chart, which is traditionally what Elliott was using, I believe, when he was coming up with his theories. Now, did we break any other rules? No. The other rule to respect is that wave 3 can't be the shortest wave. It's really not. It's one of the tallest waves, and we can go into all sorts of Fibonacci ratios and whatever for a bit, but we're not going to do that. I'm going to try to keep it easy. Remember, there's 5 waves in a motive wave, there's 3 waves in a corrective wave. I think we've had waves 1, A, B, C for 2, 1, 2, 3, 4, 5 for 3, A, B, C for 4, and then again, 1, 2, 3, 4, 5 to finish 5. And from there, what we're looking for is a counter trend, okay? Now, when you complete a 5-wave count, we have to either say that the trend formed within here at a higher wave degree, which I'll notate in parentheses, okay, is either going to be A or it's 1, and we don't know. If it's wave A, then we're looking for a counter trend B and one more push following down for C. If it's wave 1, we're looking for a big full motive wave heading lower. It just depends where you're at in your Elliott wave count at those higher degrees. And that can be really theoretical. I'm not really going to go into it, but what we do know is it's motive, and waves A or 1 are both motive. And because we are in a counter trend at an overall larger wave degree, we can safely say that we have begun the first downtrend of whatever trend we're in. It could be sideways, which is annoying. And I hate it, but whatever. So we've had this motive trend, big downtrend. It broke, and I'm going to go ahead and label this like a downtrend. I'm going to walk you through this really slowly. We're going to now look for an ABC counter trend to this income, this first motive push down, just like we did all before here. This A, B, and C through here, off of that first push down, it could be something like that, right? Where, hey, look, we've had wave 1. And wave A sometimes doesn't come above the beginning of the prior push down. And it's true. We may be in that situation here. We may be completing wave A at this higher wave degree right now. That could still be the case. And I'm just going to note that down. This could be the top of wave A. And it would be at, let's see here, a smaller degree. This is A. If this is A, then this is B. Oh, shit. A, B, C, what's here? 1. Here we go. Here we go. Classic confusion. Here we go. Looking for a counter trend, which is characteristically going to be 3 waves. Now, those 3 waves can set new highs and lows. It's possible that wave B actually gets really big and it expands, in which case we're looking for a motive wave through here and then a breakdown in 3 waves. But until we have that, I don't think it's good to speculate that's what we're going to see. And so what I'm going to do is start notating some trends through here, right? So this trend broke there and then continued higher. So this was a counter trend. So there's 3 trends through here, and I'm going to use those to help me define where I'm going to put these counts down. I'm going to say that this is wave A through here. And then this small push down, this is wave B, and this is wave C up here. And this is probably completing, ready for this? So this was A. I'm going to duplicate this. I'm going to pull it up here. We're going to say that those 3 waves are either completing waves B or 2 of this higher degree. And I'm going to go ahead and pull these down and clean these up just to make them a little more sensible. Maybe I should have done this when I first made them, but that's okay. Just bear with me here, like click around. We're going to be talking about what this means now, because clearly the price is trying to regain this uptrend, and it may not. The point is, though, that we don't have another external uptrend until we pass above the high here at C near 458. And again, that's because downtrend or uptrends are defined from a high and a low and then not cutting through the price stall between those 2 points, right? And we don't have a high over here. We don't. Like, you could draw this if you wanted to, but this technically isn't, per Bulkowski's chart pattern analysis, not a proper external trend line. You're just connecting 2 lows, and it's fair to say price will, if it comes down, may come through there and touch that. That's very possible. But right now, that would be technically speculative. And if you are going to do that, probably the best thing to do is try to figure out what kind of triangle you're in at that point by connecting highs, right? And that doesn't look very triangle-y, triangle-esque. Much like a triangle. So here we go. What are we doing now? Because obviously we're moving down in let's see. Is this a motive wave through here, do you think? This is the tricky part. Now we're going to start getting down to the nitty gritty. Remember, waves 1 and 4 don't overlap, right? Ooh, that's like a perfect touch. Closing on 8/17 at 436.29. Coming up to, let's see, 436.32. Am I going to give it 3 pennies of wiggle room? Yeah, you know, I will. It's not like, it's not, that's, if that would just, let's see here. If this is A, this could be B through here. 1, 2, 3, 4, 5. You know what this is actually? This is probably a complex measured move down. It's probably got a couple of different counter trends in it. I'm going to take a Fibonacci tool through here, and we're going to see. Now, the 1.618 extension coming in at 416 typically marks the end of such trends. Looks like it. I'm going to turn on some candles here, and this will give us an idea of what the intraday action was like. Big springboard through there, below that level, and then price flying out of it. This could be a massive counter trend. And you can see how the chart gets kind of like muddy when I turn the candles on. I like to keep to these nice crisp lines. So what I'm going to do is I see 1, 2, 3, 4, 5 through here really cleanly, and you can see the RSI is oversold twice. Typically that occurs at the end of motive waves. So if this is the end of motive wave 3, that could be the end of motive wave 5, right? 3, 4, 5. Yeah, I think this is some sort of weird flat through here. I'm going to go ahead and label it and try to figure out what wave degree it's on. I think it's going to be, let's see, if this is A, B, and C, and we're looking for a new cycle wave 1, and so if this is cycle wave 1 or A, again, we don't know at this point what it is. Because it could be 1 or it could be A. If it's A, then we're getting one more leg down off of this counter trend push higher. If it's 1, then we're going to get 5 more, and it'll be kind of like this one back here, right? We just don't really know. And that's because, well, we're just looking for a motive wave down. Really, it's what it is. And if it's going to be wave 3 at this higher degree, it's going to be 5 waves like this back here, and it'll be another big push. In which case, what I should probably do is take out my Fibonacci time series and just like, let's see, do I want to do that? Yeah, I guess I could. How about time ratios? That's what I really want. There we go, Fibonacci time ratios. And we'll go from here to, so just the time length of that first motive wave down. And what I'm going to do is I'm going to take some of this stuff off. I'm going to put 100% on there. And then I want 200 and 300, because what that's going to do is supposedly if each leg is the same time length, then it's going to match up perfectly. And you can see that at 200%, right, we seem to have finished, guess what, wave B or 2. Can't make that up. You can't do it. And so is it possible that we're in a counter trend now that will last until April of 2024? Yeah, it's very possible that this is going to be heading down, I should say, for wave B or 3. So I'm going to duplicate this because this is kind of where my bias is, personally. Let's see here. Wave C or 3. And if it is wave C or 3, we're expecting a motive wave. We're not expecting a horizontal triangle. We are looking for something to go down. And if it's corrective, if it's wave C, that is to say, I'm going to look for some sort of alternation in principle between, and characteristically between the incoming motive wave. I'm going to skip the separating wave here. Just forget about it. Okay, you can see that this thing kind of mirrors halfway through. It doesn't matter. Okay, so there was a lot of overlap, and this thing kind of like broadens out. It doesn't really channel from that all-time high heading down. Almost forms some sort of triangle, reverse triangle. I would expect this to be different. However, it looks like, since we've already got this incredible uptrend going, it may form in some sort of, I want to say broadening pattern. I want to say right angled and broadening formation. But again, the trend lines are going to be weird. So we're going to go for measured move down. Complex measured move down, probably. This is probably an measured move down, if I had to guess. In which case, I think what we're looking at is, I'm going to call it a complex measured move down, because I think we might be starting the first measured move down in a series of measured move down. And if you want to see what that looks like, go look at AMC. Look at AMC really carefully. There's a ton of this in AMC. That's probably why I'm seeing it here, is because it's something I've seen in the past, and that's my bias. Whatever, we're just gonna go for it. So inside of here, this first incoming wave, I'm gonna look for A, B, and C at a smaller wave degree, which at this point, let's see here, is going to be below cycle, which I think is primary. And I got I have Arabic numbers up, so I need to go to Roman numerals. And I think generally I put a circle after it and I color it white. So we're gonna say, geez, this is hard. Is it little a? I think I've got the A's and the B's mixed up, capital and lowercase. So just remember, I'm not worried too much about it. Cycle primary. No, it's good. It's good. It's good. Okay, here we go. This is A at the primary degree, right? Okay, you know what? It doesn't matter. It's supposed to be lowercase. It needs to alternate from cycle, but it's traditionally cycle's lowercase and the primary is uppercase, but I have them backwards and it doesn't matter as long as they contrast. Oh geez, here we go. There's that confusion again. It's just super hard and I don't want to hear it. Okay, so here's C and here's B, forming that first measured move down. Nice. And we're going to do an extension study here. We're going to see how this lines up. Show me 161.8 or 2, which is it, right in between those. And I bet you if I turn on the candles, maybe the intraday price action, yeah, came right down to about 2, which is pretty intense, really. And we can use these as price levels as support and resistance if we want. I don't. I'm going to get rid of them, keep the chart clean, go back to a line chart. Now, what's happening at this moment is a big counter trend. I have to consider that wave C might have actually ended down here, in which case we're looking at waves A, B, and C all over again. And I'm just going to do this. A, B, this is another possibility. This is why shorter term price action is hard to predict, because you have to use less known information to try to guess what's going on. On a larger degree, we know the markets are eventually going to go back up, like duh. But we could be looking at the top of wave 2 or B at this point, and it will cease to be wave 2 if it passes this other high, and then we'll say, okay, it might be B, but it's probably actually just going to like rocket. But because we don't know that, we really don't know until we get above that 450, 460 level. We haven't broken the rules of progress to the downside yet because we haven't passed this prior peak. Until we do that, hey, we gotta keep an open mind. It really could still be heading down, okay? And so this is weird because in this instance, you have wave B setting a new low and wave C passing wave A. And that happened back here too, actually. Here you go. Wave B set a new low, right? And then C passed the high of A, right? So, I mean, that stuff's confusing, and it's possible that we see that again here. It's not to say that it will because it happened back there, but it could. We've seen it before. These are called expanding flats. At any rate, this is going to be characteristically a three-wave move. And what tends to happen through here is you get one touch of oversold and overbought in a corrective trend. This is looking just like that. It really is. And through this uptrend, you're going to see that volume here, the peaks are generally coming down. This yellow line I have running through those price or those volume bars is the 30-period average, which is also decreasing. Something else to support that this is a corrective uptrend is the implied volatility dropping. Now, when SPY is in its normal uptrend, implied volatility going down is bullish. I don't know why that is, but that seems to be the trend. What I've noticed is that in this bear market that we've been in for a while, I'm calling it a bear market because the market's not going up. It's that implied volatility tends to flip, it tends to be negatively correlated with the price. So when price goes up, well, okay, here we go. It's relative to the trend. If you're in a trend, like here, we're in an uptrend, and implied volatility is going down, the correlation is negative, okay? Which means that motive is heading the other direction because this is a counter trend. That motive is congruent with rising implied volatility. So through here, we had a wave going down while implied volatility went up, right? Setting a new low for B, which can be confusing. But remember, this might be the bottom of 1 back here too. So we have to bear that in mind. So it's kind of a bad example. And again, here comes the uncertainty. But here you have the high of C in a corrective trend, and then wave A, which is motive, implied volatility goes up. And then through B, you can see here from A to B, implied volatility is going down. Okay, and then it comes back up. This might be another A, B, and C wave through here. Yeah, this is complicated. This is very complicated. And this is why we have so much uncertainty. Because it's looking like at least if implied volatility is rising to the downside, that motive is still down. That's kind of the hint there, I think. MACD, of course, is looking crazy because the market's super positive, but whatever. We're going to ignore the MACD for a while. I like it, I do, but it's not always the best indicator until you get crosses. Other than that, I just kind of ignore it. We are, of course, overbought in the RSI at what I'm thinking is the top of wave C. We're going to zoom in to this little uptrend here and try to figure this out. So in a corrective trend, you get 3 waves, and this is a flag through here. This is absolutely a flag. We're going to look at it. So that's where the flagpole would be, and you want to use that high for the price target through there. And the price target comes in at 461.38. That is above 458, which is that prior high. We'll see if we get there or not. You can see that the RSI through here it's very, very overbought. This is common. The biggest moves happen while the RSI is either deeply overbought or deeply oversold. What we're looking at through here is a classic case of divergence, where you have lower peaks in the RSI, but on the price you actually have the opposite, which is higher highs. This typically signals the end of a wave degree, and depending on how many wave degrees you have to complete will determine how many times you break that bearish divergence. If we break that bearish divergence again, I would be surprised, but honestly, it's looking like we're going to go test 458.16, and even maybe on an intraday basis, we'll get above that level and hit 461.38 and reach the perfect target. And that is really where we determine if we're going to be in a bull or bear market for the next bit, is when we get to that level. And remember, volume is dropping. Implied volatility is dropping. These are indicators that tell me that we might get there, but we probably won't stay there. I would be very wary personally if I were trading, but I'm not. So it's easy to look at it and be like, this is probably what's going to happen. I don't really have any bias. I mean, I do, but who cares? It's not like I have money in the game right now, which is kind of nice, actually. It really is. So I really am prone to think that this is going to be the top of wave 2 or wave B, and then we're going to get another push to the downside. And if that is true, then I'm going to put down another target here. I'm going to measure down to the bottom of A, not the all-time low, but the bottom of A, and come up to the supposed level that we will reach before turning down, and look at the extensions. So at 419.66, that is this previous level of support and resistance, which is really interesting. That's very interesting. It means the market fell a little too low, a little too fast, and then bounced right back. And if we get what typically happens, and that's a 161.8 extension, then let's see where we're going to be. Then the target's 395.89, which is pretty low. Pretty low. And again, we have these Fibonacci time extensions that are telling us that we're probably halfway between. Let's see. Oh, wait. That's not what I want. We're halfway. We're in the middle of one of these larger wave degrees. And if this is the counter trend, that would make a lot of sense. I'm going to do another Fibonacci time ratio, and we're going to start it. We'll literally start in the same spot and come out here, and you're going to see that at this time frame, it doesn't look as precise. Like, hey, it went a little higher before we started that. That's fine. That's just the way the charts display themselves, because now there's going to be after hour and pre-market data on here, but that's okay. So we're going to go ahead and color all of these blue so we can see them a little better. And then we're going to take everything off, but 50%. Does that show up through here? Right there. I need to color the actual percentage. There we go. And again, you can see like, hey, we're just about right there. And like that, if it's that straightforward, that's great. Yeah, show me 460 in the next, what is that, 1129? Yeah, next week. Show me the next couple of weeks that we hit those levels towards there. And then watch the market turn around. I'll just be like, well, duh. That's kind of what the markets showed that they would do. And I think this is logical because we really haven't completed the overall corrective trend at a higher wave degree yet. Not yet, at least. Not until we get that next push lower. Which, you know what I'm going to do? I'm going to color this blue too, so that we don't get too confused. Yeah, complex or measured move down to 395. Possible. Very possible. And if we end up in a larger motive wave, that's going to be really scary, but don't worry about it. The markets do this sort of thing all the time, right? And the markets are not the economy. Those are important things to remember. So that's what I've got for today. That was kind of lengthy, and I didn't really anticipate going through all of that. Remember, the alternative count is that this is actually 1 down here, and we're in this big counter trend for B, this being a sharp. And then wave 3 would be like tremendously terrifying because it would be very strong. And let's see what's here we go. That's what's missing there. If it is, then we take this and we lower it, so our targets get a little lower. But for now, I'm gonna leave it there, and I'm gonna leave this over here. And I'm going to say, yes, we passed this high, but really it was this previous high. And I really hope in my last video I was saying it was this high, this 460-ish level. Time will tell. Anyway, this is way too long. 25 minutes. Hey, if you've made it, that's great. Then you're a real chart nerd person like me. I'm out of here. Happy trading. Oh, wait, let's get AMC real quick. Show me AMC. Oof. That's awful. Okay, enough said. Let's go to GameStop. Jeez. Yeah. Okay. Well, never mind. All right, I'm out of here.